In one particular business course that I was listening to, it says that most people, when they think about raising money for their businesses, the first place they go to is the banks. Okay, so let's cover that now. All right. Okay, banks. You can get two types of funding from banks. We're talking about raising up to $50,000. You can get two types of funding from banks, generally speaking. One is a loan, and the second thing you can get is an overdraft, a loan or an overdraft. Generally speaking, overdrafts are easier to get, and I'm going to tell you why and how you should use an overdraft in a moment, whilst loans has a longer application process, is a little bit more stringent, and can come with a heavier price. But loans sometimes can be cheaper than an overdraft. Okay, it just depends on the type of overdraft you get as well. And because there's so many types, we're not going to go into those kind of details now. You have to check that with the particular bank that you want to borrow the money from. But the point I want to make today, which is really important, is that the problem with getting money from banks is that the very first time most people see their bank managers face to face, or what we say eyeball to eyeball, is because they need money for their business. And that is the wrong way to deal with a bank, okay? If the very first time that the bank manager, him or her, is setting eyes on you is because you need money, they have no choice but to judge you based on your credit score. You understand? Okay, so you greet somebody at the bus stop every morning. You say hello, you talk about the weather, you talk about shopping and stuff like that. And then one day they have a need, you are more obliged to help them financially than somebody you don't know who just comes across to you on the street asking you if they can have $10 or $20 or whatever. It's the same thing when it comes to the bank. Even though your money goes to the bank, you may be working and your money may go for the bank and you may have been there for years, but you've never set eye on the bank manager. And that is a problem that we have to resolve from the beginning. So what you and I need to do, or what you need to do if you think for a moment you're going to need your bank manager to come on your entrepreneurial or entrepreneurship journey with you, then you need to make regular visits to your bank manager even before you need the money. So what kind of visits am I talking about? I'm talking about going to your bank manager every 3 to 4 months and telling them about your idea, what you plan to do, how it's going to work, showing them your plan, asking them for advice, not asking them for money, but asking them for advice, taking the advice and running with it and using it. And then when you need money, because you've been there regularly to visit, to share your vision, the vision of the business, and you've been talking to them about the business and stuff, so they're more likely to allow you to leverage your relationship as opposed to your credit score. Okay, if your credit score is terrible, okay, they're probably not going to do it. But if it's just okay, if it's on a margin, if it's just a borderline credit score, they'll do it because of the relationship. So now, let me tell you another way to build a relationship when it comes to finance. How do you build a relationship with the bank? So build your relationship with your overdraft, okay? Go into the bank, get a overdraft facility that you can pay back every month or every so often or whatever it's agreed on the terms. If it's agreed that you pay the overdraft back every, 3 months, then do it. Get a small amount that you pay back. Use the overdraft as the medium to build a relationship, because once you can borrow money and pay back that they lend to you, you are showing that you're a good bet, okay? And so when you go for a larger amount, it's easier for them to look at your record and see that you're already paying back the $100, the $200, or the £500 or whatever it is. And so, therefore, they're more likely to lend you bigger amounts. Now, let's not forget something. Banks are not primarily there to lend money. Can I say that? Yeah, I think I can. Banks are there to make money. They're more there to make money than to lend money. So the reason why I said that is if they can find a way of making money without lending it, they'll do it. Okay, so secondly to that is they want to lend money because that's one of the primary ways they make money. Okay, so just having that in the back of your mind tells you you've got to go to the bank with an idea that's going to make them money. Okay, they're not interested in really helping you fulfill your entrepreneurial dream. No, let's be honest, let's get real. They're not there for that. They're there to make money. Okay, unless your dream is going to make them money, they're not particularly interested. So you're going to be going to a bank with an idea that can generate money. And the bank rates, interest rate can vary. I mean, I spoke to one bank manager once. He was talking about 29%, interest rate. I'm like, wow, who's going to pay that? But hey, they get people to pay it. So you got to look at that before you actually raise the money. So what will the bank need from you? There are a few things, maybe three major things that your bank manager will need from you. They're going to need a business plan, mostly. Actually, sometimes if you have a lot of money going through your account, they probably won't need it, but they're going to tell you they need it, but they're not going to read it. I know that for a fact. Okay, so they're going to ask you for a business plan, so it's better to write one and have one. Most of the time, they're going to require a 50% match funding. So if your business needs $5,000, they're going to want you to put up $2,500. It's kind of like a match funding. We call it match funding in the UK, and they're going to need that. They're going to need you to have some money. They're also going to need you to have an excellent credit score. So, but I've told you the way to get over the credit score is through relationship. So let me just recap on some of the things that I've said. The bank, for you to leverage a relationship with your bank manager as opposed to your credit score, then you need to visit your bank manager regularly. Okay, that will really help you to banks have some very useful information from the research that they do into different sectors of the industry. So just by visiting and getting those kind of informations can actually work for you anyway. Develop a relationship when you visit. You develop that relationship by the means of using the overdraft facility and also ensuring that all your money, the money that you make, especially if you get paid cash, make sure that all the money you make every month, every week goes through the business account. Okay, if you get a lot of cash, if you're a plumber and if you trade on the market, you're selling your stuff on the market every 2 to 3 days, and you get a lot of cash. A lot of people don't do that right now, but some people still do. So if you get a lot of cash, the temptation is to spend that cash on your business before you actually take it through your bank account. I suggest you don't do that. I suggest you pay the money into your bank account first and then use the money to run your business, because the bank manager, him or her, will have no choice but to look at how much you've actually paid in to determine whether they're going to lend money to you or not. So let's remember that. Those two things will help you build your relationship. And finally, take the advice that they give you. If they tell you, okay, make a change to your business plan or make a change to that idea, and it's a good advice, to take it and use it, because it will work out for you and it'll improve your relationship and ensure that next time you go to the bank to raise money, they know that you listen to them, so they're going to be there to listen to you.